Hello, this is the Stocks GPS channel. Invest in your life. Berkshire Hathaway will collect more than $6 billion in dividend income over the next 12 months. Just 5 holdings will account for about $4.25 billion. Since taking over as CEO of conglomerate Berkshire Hathaway in 1965, Warren Buffett has put on an investing clinic. The Oracle of Omaha, as he's come to be known, has created more than $610 billion in value for his company's shareholders, as well as delivered an aggregate return on his company's Class A shares of greater than 3,600,000%. As of December 31, 2021. Over the next 12 months, Berkshire Hathaway is set to collect more than $6 billion in payouts. However, just 5 stocks are expected to net Warren Buffett $4.25 billion in combined annual dividend income. Take note that the projected dividend income figures below include shares held by New England Asset Management NEAM, an investment firm that Berkshire Hathaway owns. First, Bank of America $908,909,765 in dividend income over the next 12 months, by a small margin. Money center giant Bank of America, BAC, is slated to be Warren Buffett's dividend king over the next 12 months, taking into account the shares owned by NEAM, as well as Buffett's recent admission that it plans to increase its quarterly payout by roughly 5% to $0.22. Berkshire Hathaway is on track to collect almost $909 million in annual dividend income. Back in April, the company estimated that a 100 basis point parallel shift in the interest rate yield curve would generate an added $5.4 billion in net interest income over 12 months. For context, the Fed has already increased its federal funds target rate by an aggregate of 150 basis points in just the past 3 meetings. Second, Chevron $904,131,705. Major energy stock Chevron, CVX, is right on Buffett's heels in the dividend income generation department. With more than 159.1 million shares of Chevron held, Buffett's company is on pace to collect over $904 million in dividend income from the oil and gas giant over the next 12 months. Chevron is a particularly smart play given its integrated operating model. Although it generates its juiciest profits from drilling and exploration, Chevron also operates transmission pipelines, refineries, and chemical plants. These midstream and downstream assets can act as a hedge when the price of crude and or natural gas is falling. These ancillary operations have proved critical to Chevron sustaining its superior dividend. Third, Occidental Petroleum $893,465,783 includes preferred stock dividends. Another energy stock that's a passive income powerhouse for Warren Buffett is integrated oil and gas company Occidental Petroleum Oxy. Buffett's company is collecting a $0.52 annual payout on the more than 179 million shares of common stock currently owned, and is also reaping the reward of an 8% yield on $10 billion worth of preferred stock. On a combined basis, that's more than $893 million in total income expected from Occidental over the next 12 months. The one thing worth noting about Occidental Petroleum is that its balance sheet isn't nearly on as solid footing as Chevron. Occidental's 2019 acquisition of Anadarko buried the company in debt, although it's making headway on repaying its debt, thanks to multi-decade highs for oil and natural gas. Occidental Petroleum still has a long way to go to fortify its balance sheet and improve its financial flexibility. Fourth, Apple $838,439,808. Seeing as how it's Berkshire Hathaway's largest investment position by a mile, it should come as no surprise that technology stock, Apple AAPL, is slated to be a top income stock for Warren Buffett. Including assets held by NEAM, Buffett should collect more than $838 million in dividend income from Apple over the next year. The reason Apple comprises over 41% of Berkshire Hathaway's nearly $331 billion of invested assets is simple: it checks all the appropriate boxes. Apple has an exceptionally loyal customer base, is one of the world's most recognized brands, and innovation has consistently pushed its products into relevancy. I'd be remiss if I didn't also note that Apple has repurchased an almost unfathomable $499 billion worth of its common stock since instituting a share buyback program in 2013. Fifth, Coca-Cola $704 million. Last but not least, Warren Buffett nets a small fortune every year from beverage stock Coca-Cola Co. The longest tenured holding in Berkshire Hathaway's portfolio is expected to dole out $704 million in dividend income to Buffett's company over the coming 12 months. One reason Coca-Cola hasn't fizzled out over many decades is its geographic diversity. Except for North Korea, Cuba, and Russia, the latter being due to its invasion of Ukraine, Coca-Cola is operating in every other country around the world. With a cost basis on shares of Coca-Cola of about $3.25 per share, Berkshire Hathaway is collecting a jaw-dropping 54% annual yield on cost. In short, Buffett and his team are more than doubling their initial investment in Coca-Cola every 2 years solely from the dividend.